Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Elemental Altus Royalties. Elemental Altus is traded on the TSXV under the ticker ELE and on the OTCQX under the ticker ELEMF. I'm joined today with the Chief Financial Officer, Dave Baker. Dave, it's great to get you back on the show. Now, we missed you for the financial section just a couple of weeks back, but you had a big announcement in your family as a new father, so congratulations. But we also have some partner updates that we just didn't have time to squeeze in, and some of this news has broken since I talked with Fred just a couple weeks back, and that is the news you put out on May the 28th. Now, this is a big deal in that your Laverton royalty, where you have an uncapped 2% gross royalty, has switched operators here. It was sitting in the hands of Focus Minerals. Now it's been sold over to Genesis Minerals, which is a perfect fit. They're a big company. I'll let you kind of break down how this change in operator is a huge benefit to you as the royalty company.
Thanks, Shad. Pleasure to be here, and thanks for the kind words. Really enjoying the start of fatherhood. Very excited about Laverton, and look, we've been thinking about this for a while as an opportunity for the company and the royalty. So for background, we acquired a 2% royalty on the Laverton district there in 2021 from South 32. Was operated by a smaller Australian company called Focus Minerals, but always thought that the potential for that to go in bigger hands. And obviously with the gold price moving and the general consolidation theme in WA and Australia, this has landed in the hands of an absolute top tier operator. So we noticed that Genesis Minerals, a $5 billion Australian miner, acquired the tenements at Laverton for 250 million Australian dollars. And the real key there is that Genesis operate, also called Laverton, a mill 30 kilometers away. And so all of that 1.8 million ounces of gold on those tenements that we have the royalty cover, that's all on existing mining licenses. Genesis has come out saying they're going to kick off infill extensional drilling, grow the resource, and then incorporate those oxide and transitional open pits into the mine plan. So very exciting for our royalty. I think we're going to be talking about Laverton a lot in the next couple of years.
Well, and just following up on that, based on the fact that they're operating nearby and they're a competent operator, I mean, this is one of the benefits of the royalty model, Dave, is that you can have a royalty in place. I think initially the market wasn't excited about this royalty to the same degree that you guys were, but you always had the thesis this would change hands into a stronger operator. So just maybe you share that background on this particular royalty, but also what you think is possible here as far as a timeline.
Yeah, absolutely. So we acquired this royalty, as I say, from South 32 at the start of 2021. That portfolio was cornerstoned by the Karlawinda royalty, which is our largest producing gold royalty in the portfolio. But we did ascribe quite a lot of value to Laverton just because of that upside potential and that it had a number of producing mills nearby. Now, the key at Laverton is that all of our reserves and resources there, they're all on existing mining leases. So Genesis really do have the ability to fast track production. And that mill there is also used to treating third-party ore as well. So they're really confident. We're confident there that we're used to lots of different ore sources and feeds and to get us into production. Now, we don't have any targets there from Genesis at the moment. Imagine that's going to come out soon, but I imagine they're going to get started on that pretty quickly, given that they've spent 250 million Australian dollars on the leases. But, the resource package there is substantial with, 1.8 million ounces of gold covered by our royalty there. So I would imagine that's going to be one of our key royalties in the near future.
Okay, well, we'll keep following along for more of an update from Genesis then as they kind of digest this transaction and message to the market what they think the timeline could be. But based on the way you're talking, it sounds like it should be substantial to them and could be fast-tracked much faster than if a different company had picked it up. So that's good news for the royalty holders as well. Let's also dig into a news piece in here that you have, and this is from Northern Star Resources. They put out a maiden resource and ore estimate at the Hercules discovery. Now, this is part of the South Kalgoorlie operations, the SKO in Western Australia. Walk us through how that plays into the mix here as far as your portfolio.
Yeah, it's a really good one. Now, with SKO again, it's one of our smaller royalties. Pays us a couple $100,000 a year, but it's got a very long life. It's been very consistent, and performance at SKO has been excellent. Now, we had heard about Hercules for a while, and were expecting a resource update. That's come, and it's come really at the top end of our expectations. For that maiden resource, nearly 900,000 ounces of resources, nearly 250,000 ounces of reserves, and that's going to be mined open pit underground, and you're going to contribute to a really strong little royalty, and really incremental to the value provided by our royalty at SKO. I think the other slightly quirky thing about that royalty is the discovery bonus. So when they either mine or delineate 250,000 ounces of reserves, we get $1 million Australian discovery bonus that comes to us. So given they're only a couple of thousand ounces away from delineating that reserve and that they're looking for expansion and to grow that resource down there, I think there's a couple of kickers in terms of discovery bonuses that we'd expect in the near future as well.
Yeah, nice to have those discovery bonuses built in along with the royalty. And that's just another thing you guys do as a company, and you have different ways to generate revenues. Dave, maybe speak to the one-off payments because you're going to have a big year in one-off payments like that, including, the payment from Ming. But just point out to people listening in that in addition to the royalties, you also have some of these different one-off payments that add up being pretty substantial in the calendar year.
Yeah, exactly. So we tend to 13 to 15 million US dollars of one-off payments. The key one there being the settlement at Ming, which is just over 10, and then got a couple of others of disposals and the buyback that we're expecting Arizona Sonoran, the partial buyback of that royalty to $1.9 million just at the start of Q3. So 13 to 15 million dollars plus, of course, some of our one-off payments at Corrales Sud on commercial production and then production milestones. So on top of our revenue, which I think at current spot prices is looking at north of 35 million US dollars, yeah, that 13 to 15 million dollars of one-off payments in the bank really will grow that cash balance over the year.
Well, and you mentioned there in passing the Arizona Sonoran at their Cactus project. They also have a big year in front of them. So maybe highlight how that's still a growing and important royalty in the development pipeline.
Yeah, they're doing exceptionally well. The Arizona Sonoran guys developing the Cactus Park Salia deposit, which covered by a royalty that we acquired from RCF. Going full steam ahead, I note the recent announcement that they've engaged an investment bank, Hannon Partners, to run the project finance there. Shows that they're going full steam ahead to build this mine. It's going to be a busy couple of years for them. I think in the second half of the year, we're getting a resource update and the PFS, and then that's really going to kick off permitting, any amendments on the land, and then start that DFS that they'll complete over 2026. And I think the company is still there targeting FID in 2026. So that would mean first copper cathodes out in 2028 or 2029. So that's very quickly going to become one of our producing royalties on copper product, key material, tier one jurisdiction in Arizona, and a really credible operating team.
And a nice complement to the copper you're getting from Caserones at present. So you'll still remain primarily precious metals, but still growing a little copper assets on the side, which I think a lot of people enjoy having exposure to. Maybe just one more question, Dave, and that is on the broader portfolio. We often dive into some of the key cornerstone assets like Carlawinda or Caserones, and we've talked a lot recently about Corrales Sud because you've started getting paid on it, which is a nice thing. But you have a lot of royalties that don't get a lot of daylight, and just remind people of the overall size of the royalty portfolio that you hold and about how many are paying versus how many are still, future potential mines that just haven't surfaced yet.
Yeah, it's a great question because we do, again, being quite revenue focused, we are often just focusing on where the cash flow and the near-term development. But like Laverton that we've had recently, there are just a whole bunch of royalties in that bottom drawer that one catalyst suddenly moves them up the priority list. So yeah, about 80 royalties plus or minus. 11 of them are paying, but obviously we're very heavy on that focus on revenue generation as a proportion. So we're more than two-thirds by NAV on revenue generating versus development. Obviously, as development royalties move up that development curve, then they'll be more consequential. But the focus has really been on revenue generating assets. We're very gold focused, so on 85% gold with a bit of Caserones, as you say, and then I think Cactus will add to that, Park Salia will add to that, and then very split by jurisdiction. So we're about a third Australia, a third West Africa, and a third in the Americas. So we are diversified, but also very concentrated on gold and producing gold, with plenty of small royalties in the bottom drawer and plenty of upside organically.
Well, I just got to ask you one more, Dave, because a lot of people know that you're cashed up now. You just had one of your best quarters ever, but you've also really done a good job of changing the profile of the company from like just a year or two ago, where you were looking at with debt versus cash flows versus today. You have a revolving credit facility and you have a big year in front of you of bringing in revenues. So when you start looking at more acquisitions, Do you think they will be some of those bottom drawer companies that you get a good price tag on, but they're more development stage? Will they be producing assets, or will they be groups of royalties? What are you looking at as far as what kind of acquisitions would the company like to make next?
Yeah, it's an excellent question. And Chad, to your point, I cannot talk enough about how transformation of the company has, the balance sheet of the company has performed. So 2024 and into 2025, where the company repaid $30 million of debt. So we are completely debt free. At the moment, we have just over 23 million US dollars in the bank with no debt, $50 million dollars available on our facility, and with the three Canadian banks, so National, CIBC, and RBC, and confident that we could upsize that facility to a modest amount if needed for the right deals. The pipeline could not be stronger. We've got a number of offer letters out there at the moment, some on development stage, royalties, some on producing assets, some portfolios, some one-off, smaller but very opportunistic deals. But yeah, really heavily focused on gold and silver, so precious metal focus, and then a bit of copper as well. That's the real focus of the company. And really to put it in context, where we've got, say, by the end of the year, we might have 70, 80, 90 million dollars we could deploy without diluting our shareholders at all. And that's in the context of being a sort of $260 million company. So it is, the leverage there is quite powerful in terms of what we're able to do and what deals can be out there to be done.
Yeah, it's honestly the strongest setup I've seen you guys ever as a company. Financially, it gives you access to possibly deals you couldn't have said yes 2 years ago, or deals that you had to team up on. Maybe you could do it solo this time. So there's a lot of optionality you have for a lot of different kinds of deals. We'll keep our eyes peeled for any transactions that go on. And for people listening in, if you want to follow along with the news flow, definitely click on the link in the show notes. It takes you right over to the Elemental Altus Royalties website, straight to their news section where you can follow along or sign up for updates. Dave, keep us posted. We'll get you guys back on for an update when the next key news breaks. And as always, looking forward to our next conversation.
Thanks, Shad.